Is that your son?
No, I just bought this baby cash. No.
Oh my God, guys! I hope everyone that bought puts at around 430, 435. I hope you guys got into puts with stop losses. Proper risk management. Guys, I make YouTube videos. I trade for a living, and I post all of my plays completely live on Twitter. If you guys, guys, please, just follow me on Twitter. Now you can understand why I've been so adamant to wanting to buy the dips, because we were so overextended to the downside. It was basically impossible for us not to even bounce, regardless of the bearish market conditions that just started, right? Clearly, we know that in March, macroeconomic changes are going to come to the stock market. We're going to have our interest rates increased, and we're going to stop quantitative easing. We know that. But just from a trader's perspective, guys, I was telling you that the market would bounce. That doesn't necessarily mean that I'm a blind bull, and that doesn't necessarily mean that because I understand there's going to be negative connotations in the market moving forward, that we can't play a bounce, okay? So we've been saying this for the past week. I probably seemed very annoying, but more dips. Bias long, more red days, more dips to buy, extreme fear. I was saying all this for a reason, guys. I wasn't just doing it for clickbait. Obviously, it didn't work. The clickbait didn't work. It made you guys angry. So I was just doing it purely because I had a feeling, and a very justified feeling, that we were going to bounce. All right, so in today's video, moving forward, we're going to talk about what's going on in the stock market. On the SPY, the NASDAQ, the IWM, the 30-year bond, and then, of course, we're going to look at the continued correlation between the stock market and the crypto market. All right, so without further ado, let's get started with the video. All right, number one, we've got tons of earnings this entire week. It's going to be very, very important. After the close tomorrow, Google, Alphabet, and AMD essentially are going to report earnings. Wednesday, after the close, Facebook and Qualcomm. And then Thursday, Amazon and Snapchat. So this entire week is going to be very, very important, continued for the NASDAQ and, of course, for the entire stock market, okay? And here's a chart of the SPY. Yes, I understand things look very messy, right? But just before I clean the chart up a bit, I want to show that the SPY closed exactly at this 50% fib level, right? And we closed above this 447 level. The 447 level was essentially the 50% fib level from this recent drop to the most recent low. So I was saying on Twitter that if we close above 447, I want to go long. What I didn't anticipate is the SPY would intraday in the close rally up to this next level of resistance. All right, so let me clean the chart. All right, looks a little better. All right, so you can clearly see that we reclaimed this very important level right here. In the morning, I was saying that 443.75 was going to be an important level to cross above. And oh yeah, this morning we were holding swings overnight, actually. And those swings were up 34. Yeah, these swings were up 20 to 30% each. So those worked out really well. So after I closed them, I said that 443.75 was going to be the next level that I was going to become bullish above. And this was that level. It was this trend line here. So now we can clearly see the SPY closed at this major level of resistance here, which is from the highs to the most recent lows. So this is a very important 50% Fibonacci level. And we can see that, yes, the MACD did exactly what I said it was going to do yesterday. In yesterday's video, we were going to continue going on higher. The RSI is obviously moving on higher. The price moved on higher. I was saying that the market would continue on higher today. And that's exactly what happened. But now, this level needs to be reclaimed. 450.37. The next level right after that is going to be 451.16. Those are going to be the two key levels of resistance right now. So this move here could potentially just be a dead cat bounce. That's completely plausible. But after having a huge red January, it's also completely possible that we come back and retest this 618% fib level at 457. All right, so it's very important to keep an open mind. In general, I'm telling you guys, in general, once the Fed changes its macroeconomic policies, we do not fight the Fed. Ever. We do not fight the Fed. Regardless of how bullish we've been for the past 2 years, we are going to start having a macro bearish bias to everything. But for this last month of February, I'm going to continue being bearish because we still have not had an implementation of the macroeconomic changes. Okay? It's just talk. So until we get a definitive change in policy, we're going to be bullish on basically everything. So we need these levels to close above for us to continue on higher, and then we can see 457.33. But it is very worrisome that we closed exactly at this level of resistance. So there's really my analysis on the SPY. We could continue going on higher. What could end up happening, which I don't think, but we could come back, test this trend line, and then continue going on higher. That would create a bull flag, and that would be pretty bullish, and then we can end up, coming and retesting 460, and then, we can end up making, what would be ridiculous is if we end up making a head and shoulders pattern, a head and shoulders top, as we come back to this level here, and then from here, once, the Fed changes its policy, blah, 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 then just brings it back down. So I think that would be a really beautiful scenario. It makes everyone happy. The bulls that bought this dip would be happy. The bears would have a much better opportunity to go short, closer to the all-time highs. And sentiment would switch abruptly. All right, so we have to watch this potential pattern that's being formed here. And there's really my analysis on the SPY currently. Let's go ahead and take a look at the IWM. All right, so here's the Russell 2000, the IWM. Clearly, it came back and closed again at this very important level of resistance here at 201.48. Everything was rallying into the close, right? We did close above the 38.2% fib, right? And the SPY closed above its 50% fib from these most recent lows here from January 12th. So that would mean that the IWM should be at least above 203.70. So that means that the IWM has some catching up to do. So in terms of the all-time highs, it's nowhere near where the SPY is. But in terms of this smaller move from the most recent, the downtrend, right, that caused this bear flag to form, the SPY is above this 50% fib level. So we can see that the positive divergence in the RSI caused the IWM to go on higher as well. Similar, with the MACD, things just worked out basically like I was saying it would. So now we need to see if this MACD can continue going on higher. We need to reclaim this important resistance level at 201.50. And then this important 50% fib at 203.74 is going to be very, very important to reclaim. And if we do that, then things can get very, very fun. In terms of moving averages, the IWM closed above the 10 simple moving average. And, we could see a bounce for this month. Historically, February is a pretty bullish month. And I wouldn't be surprised if we continue going on higher. But of course, we could see some sort of chop. I do expect us to go higher tomorrow. And then from there, we can chop around. And of course, the IWM has been the worst acting indice, right? So it's not necessarily that the IWM is going to be leading and going on stronger, but it is possible because it has been the most beaten down this year. It's possible that the IWM starts to get its act together and continues going on higher. But really, just to make this short, 201.50 needs to break. And then it's very possible we could see 203.74. All right. If we break above 203.74, that would mean that the SPY is probably at, where would the SPY be in accordance? The SPY would probably be well above, and it would be trading at this trend line here around 455. So it would be really interesting. We just basically have to watch all of the indices in unison and see how they're moving together. And of course, I'll keep you guys up to date on that on Twitter live. So go ahead and follow me there. And that's really my analysis on the IWM. Next, let's go ahead and take a look at the large tech stocks, the NASDAQ, and the 30-year bond. So because I saw potential to continue going on higher in these trillion-dollar tech companies, I became very bullish on the market, right? And that's why I alerted calls, and that's why I had that bias that we were going to continue going on higher. Clearly, that worked out. So now the MACD, like I said, it needed to really start overshooting to the upside so that this MACD line, the yellow MACD line, could begin to become bullish again and cross back above the 0 line. Sorry. So we closed above the 50 simple moving average. We closed above the 20 exponential moving average, and we had a really, really strong day today, right? So Apple, obviously, very bullish. It now needs to break above 177.18. We could break above 177.18. Then also the fact that Apple is basically outperforming the rest of the market in terms of where it is to its all-time high is a very, very good sign. That's exactly what we want to see, essentially. If Apple is leading the market, the rest of the market is going to follow because Apple has such a heavy weight in the stock market that it's very, very important that Apple is doing this well. All right, so 177.18, if that breaks, obviously the 180 psychological level, and then from there, all-time highs. So things look really bullish on Apple. Of course, even a, retest back down to 170 and then, chop around a bit, that would create a bull flag, even a potential like retest to 168. Regardless, a bull flag formation, and then we would continue on going on into new all-time highs potentially. So yeah, I mean, there's lots of bullishness here on Apple. Let's go ahead and take a look at Microsoft. Microsoft, same concept. We closed above the 20 exponential moving average, had a huge green day. Clearly, we closed above important levels of resistance. The next upward target for Microsoft is going to be 318.03. So if we can close above this high here at essentially 314, then 318 is going to be the next target. Again, it looks way more overextended in terms of the MACD. But because this is just very, very abnormally overextended here, it might end up falling. So, but it is a very good sign that this yellow MACD line is now starting to move upwards. And that's exactly what I wanted to see happen. All right. So now that that's starting to happen, any sort of chop or any sort of, consolidation, as long as this MACD line is starting to move upwards, that is very, very bullish. All right. So just keep that in mind that this MACD, the most important thing is essentially this MACD is starting to move upwards. The next important thing is that this RSI, we had a very good, strong green day, but this RSI, you can see it's stagnant. Look at how this RSI line, how it looks. It's barely moving upwards. If this RSI was sharply moving upwards, that would be bearish. Okay? But the fact that it's as if the RSI doesn't even want to move up, even though we gapped up and had a green day, because it looks like this, that is very, very bullish. All right. So keep that in mind on Microsoft. And of course, we were looking at Amazon yesterday as well. We were down here and the MACD line still had not crossed above yet. So I was saying because Amazon looked so beaten down still, that there was still lots of room to the upside in terms of the entire tech sector. And if the tech sector would go up, the entire stock market would go up. And looking at stocks like Amazon and Google and the other, stocks that I showed, there was still potential upside, and clearly we can see that. So now it barely crossed above. This is the first day that it crossed above on the MACD. And now the RSI is, clearly bullish as well. If we can fill this gap and close above this close here at 30.33. If you can close above 30.33, Amazon is most likely going to come back and retest this very important resistance level at 31.27. If this happens, if we get up here, in my opinion, on Amazon, Apple should be above 180, and the SPY and everything should be very, very, very bullish. So, yeah, man, this is really, really good news. But of course, it has earnings this week. So, that's why this week, I am leaning bullish, but it's not a time to go completely heavy into your portfolios. But, everything does look bullish right now. So just keep that in mind. And Google also has earnings week as well. So we closed above the 200 simple moving average. We finally reclaimed it on Google. That is a very, very good sign. Google was actually one of the first stocks in the large basket of tech stocks that lost the 200 simple moving average. And we came back and, retested this level of support that held and, continued going on higher. So that's a bullish sign as well. But of course, we have earnings. If these tech stocks blow out earnings, we can see a new all-time high this month. And that would be really, really bullish, and that would be amazing. So, yeah, man, just in terms of the large tech stocks, there is still potential some more room to the upside. But of course, because there's earnings this week, it's not 100%. So, yeah, I mean, the analysis worked out, and we could continue going on higher. We could open up higher tomorrow, but tomorrow into the close, it's going to be much more choppy. So here's the 30-year bonds, and we were monitoring the Bollinger Bands quickly falling, right? And quickly beginning to squeeze. Okay, so let me just go ahead and close. Oh, sorry. So when the Bollinger Bands get tightened and the price is very close to the upper and lower level of the Bollinger Band, a squeeze is very, very likely. All right, so right now, if the earnings are bullish, and number one, if the 30-year bonds are going up, then the NASDAQ is going up, and essentially the entire stock market is going up. So if the 30-year bonds begin to squeeze, that would essentially mean that the NASDAQ's stocks are really, really doing well in the short term. And we can see a squeeze above, 157.03 and continue going on higher, retest this high at 158.22. But of course, right now, it's very important because the MACD is starting to go upwards. But I mean, we're basically stagnant here. We didn't get much help from the 30-year bonds today, except the fact that we held this level of support at 155.14, and the momentum is starting to shift upwards after a huge down day or down last few weeks. All right, so it is a good sign that we are consolidating at this level. We're not breaking down below, and it's giving a chance for the MACD momentum to catch up and for the Bollinger Bands to catch up as well. So really, we just have to monitor what's going on with 30-year bonds and make sure we don't crack abruptly or aggressively to the downside, and things should continue to look decent. And then here we have the leading indice for the day, the NASDAQ. And clearly that was the case because there was so much room to the upside on the trillion-dollar tech companies. And yeah, man, we had a really, really bullish close here on the NASDAQ. We closed above 362.17, and then we closed above this very important trend line here at 362.72. So overall, we closed bullishly on the NASDAQ. That's fine. But, this week is going to be very important. If, those companies report bad earnings, this is going to obviously affect the NASDAQ, which is also going to affect the 30-year bonds. So that's why, the fact that the SPY closed at that level of resistance, it was a bit worrisome. But, the fact that the NASDAQ showed this much strength is a good sign. Similar to Google, how it came and reclaimed the 200 simple moving average. The 200 simple moving average on the NASDAQ will be at 366 tomorrow, potentially. So we have another 4 points to the upside on the NASDAQ. But of course, because we had 2 huge days of just pure reversal, it is very possible that we go back and retrace back down to these levels of support, maybe down to 358, 359 area, create another bull flag like I was showing, right? And then, then we'll see what happens. But of course, this whole week is up in the air for the NASDAQ in terms of earnings. Microsoft, or Google, Amazon, and Facebook, and AMD. AMD's earnings is definitely going to affect the other chip stocks. So, yeah, man. So overall, this smooth work. The MACD still has more room to the upside. We can see now that the yellow MACD line is starting to move a bit upwards here. Right, the RSI is not really sharply moving up. If we saw it move completely up, that would be a bit more bearish. but you know, it's staircasing up a bit here. Overall, this was a bullish move. So now we just need to just play the price action. At this point, anything else that I really say is just, you know, not really important. Oh, we just need to see how it holds above these levels of support. And then the next levels of resistance are going to be essentially 366.50, this 200 simple moving average, and then the 618% fib at 368.79. So we have to see how the entire market is moving in unison. All right. So that's basically what we're going to be doing for the rest of the week. All right. So there's my analysis on the entire stock market. Next, let's go ahead and take a look at the crypto market. So I said that there was a strong correlation between the stock market and Bitcoin, and obviously we can clearly see that. One of the things that basically gave it away was that Bitcoin's momentum indicator, the MACD, was well above the the yellow line, and it became overbought, while the SPY, the NASDAQ, the IWM, they were still oversold. And I also saw Bitcoin staircasing up. So, you know, I saw that there was strength in Bitcoin that hadn't been translated into the strength of the stock market. So that's why I had a feeling that the stock market was going to make a big move to the upside. So essentially that worked out perfectly. What is still a bit interesting is that the MACD, the yellow line on the MACD on Bitcoin, is barely moving upwards. So that means we're going to need to see a lot more strength out of Bitcoin now for this MACD level to start crossing back upwards and move above the zero level once more. And I think we would need at least a close above 39,600 or above these important trend lines here at, you know, approximately 40,000. So if we can get above 40,000 in the next few days, this MACD should begin to start moving upwards and, you know, continue going on higher. And this would also, we can see it much more clean here. This would also create a head and shoulders top on the market. And this would make a huge, you know, potential bearish movement for the entire crypto market, for the entire stock market. It's more plausible on the stock market because the stock market is, you know, much more heavily affected by interest rates increasing, because initially crypto and Bitcoin, etc., were used to be like an anti-inflationary security. So as we increase interest rates and as inflation gets worse, it's going to be interesting to see Bitcoin decouple from the stock market. But yeah, we in the short term, we just need to see it close above 40,200. It is a good sign now that it's starting to move upwards in the momentum, and this RSI is starting to move upwards as well. So bullish in general, right? So there's Bitcoin. Let's take a look at Ethereum. Ethereum, you know, we can clearly see that it's showing a lot more strength. It looks very, very good here. And, you know, we essentially need to close above this high at 27.25. If we can get that, then this would cause this MACD line to be way more aggressive to the upside. And then we can see a retest and then a break above this trend line. I think it's completely plausible. February is a bullish month for stocks, and that should be translated into the crypto market as well. So, you know, if we are bullish on the stock market, the crypto market is going to continue going on higher as well. So all in all, I hope you guys enjoyed the video today. And I will see you guys tomorrow. Thank you.